Mortgage rates. Where are we? We can see from this chart, Freddie Mac has been tracking the 30-year fixed mortgage rate since April of 1971. Every week, they release the results of the primary mortgage market survey, which averages mortgage application data from lenders all across the country. So looking at the right side of the graph, mortgage rates have increased significantly since the start of last year. But even with that rise, today's rates are still below the 52-year average. While that historical perspective is good context, buyers have really gotten used to mortgage rates between 3 and 5%, which is where they've been over the last 15 years. That's important because it explains why the recent jump might have you feeling a little bit of sticker shock, even though they're really close to the long-term average. And while many buyers have adjusted the elevated rates over the last year, a slightly lower rate would be a welcome sight. To determine if that's a realistic possibility, it's important to take a look at inflation. Where could mortgage rates go in the future? The Federal Reserve has been working hard to lower inflation since early 2022. That's significant because historically there's been a connection between inflation and mortgage rates. And as we can see from the graph, this shows a pretty reliable relationship between inflation and rates. Looking to the left side of the graph, each time inflation moves significantly, that one's shown in blue, mortgage rates follow suit shortly thereafter. That one's shown in green. The circled portion of the graph points out the most recent spike in inflation, with mortgage rates following closely behind. And as inflation has moderated a bit this year, mortgage rates haven't made a similar move yet. That means if history is any guide to the market, we're waiting on mortgage rates to follow inflation and head back down. It is absolutely impossible to accurately predict where mortgage rates will go for sure, but moderating inflation means mortgage rates going down in the near future. Well, that would fit the well-established trend. The bottom line is to understand where mortgage rates may be going. It's helpful to look at where they've been in the past. There's a clear connection between inflation and mortgage rates. And if that historical relationship holds true, the recent decline in inflation may mean good news for the future mortgage rates and your homeownership goals.